Weekend pumps for Bitcoin typically lead to Monday dumps, and today, October 25th, Saturday, we are getting some green here. However, we don't have to be worried about Monday dumps just yet, so let's talk about why as we do an update here on Bitcoin's chart. Now, today, or in the early part of trading on Saturday, we have been moving a little bit to the upside here, challenging $111.6 thousand, which is right where the 21-day exponential moving average is. And as price moves up, typically after hours on Friday, so past 5 o'clock Eastern Standard Time, and into Saturday and Sunday, typically you have that saying, weekend pumps, Monday dumps, or Sunday pumps, Monday dumps. But the reason why we don't have to worry about that is because of the amount of runway that we have on the futures chart. Let me explain. The reason why we have weekend pumps lead to Monday dumps is typically because it creates gaps on the futures chart here for Bitcoin, the part of the market that only trades during traditional operating hours of the traditional financial markets. As you can see, current price here is $110,740 because this market stopped trading at 5 o'clock Eastern Standard Time yesterday. Price is currently above $111,000, but we don't create any gap on this chart that needs to be filled. And we've explained gaps before in the past many times. We can do it again in the future if anyone has any questions, but we don't have to create a weekend pumps, Monday dump scenario unless Bitcoin goes higher than the highest point where price was yesterday, which is sitting at $112,320, higher than where we are currently. Now, let's get on with the update and make it quick. Bitcoin over the past couple of days has bounced off of the 200-day exponential and 200-day simple moving averages, very important areas to bounce off of. And Bitcoin has moved its way back into this overall channel by getting above this blue line, getting above this blue line of support and resistance here, and is also above the 12-day exponential moving average. Bitcoin is doing everything possible to try to turn this into a bottom here. And that is putting us in a position to get the bullish indicator that we are looking for, that, hey, maybe this in fact was the bottom, which is a weekly candle close above the 21-week exponential moving average of this yellow line here, which is sitting at just about exactly, technically it's just below $111,000. If that can happen while we're in oversold territory on the weekly time frame, this in fact could be our bottom. Something else very interesting to note is that liquidity is on the move. Our liquidity heat map here that shows high leverage positions and where they're liquidated on Binance has been depopulating lower down. This is lightening up and removing more and more financial incentive for the market to go lower. It's lightening up. It's helping to allow the market to potentially just go upwards instead of going down as whales are removing positions. Although it doesn't have to be whales. It could be anybody using high leverage. And if we take a look at total leverage overall, not just high leverage, so positions that are 10x and higher, there is still a financial incentive to go lower. But overall, the leveraged positions that get liquidated lower down are overall going away. I'll do another video in a second that compares that map to previous maps earlier in this week just to show you. And to end this video, though, the ETFs yesterday were positive for Bitcoin. They were negative for Ethereum. For Bitcoin, it was inflows of $90.6 million. For Ethereum, it was outflows of $93.6 million. That is the update for the day. I hope you're having a great weekend. Do good things. Be good people. Make a bunch of money.